Axis Bank's Q1 FY27 numbers. Those numbers flashing at the bottom of your screen since quite a while. The net interest income number has come in 8% higher on a YOY basis. So there's some bit of margin contraction which has played out on the NII front or on the NIM front. We'll try and quantify that once the PPT is out, of course, but broadly there seems to be a margin contraction. Okay, I'm just getting stock of the margins at 3.46% versus 3.62%. That's a sharp margin contraction for Axis Bank that we've seen. Provisioning at 2 crore, which is 2,222 crore. Operating profit growing at just 1.5%, despite the strong loan growth. Gross and net NPAs well under control, and that's the one key positive. So there's plenty that we need to dissect here. Let me bring on board Aditya Shah to try and give us a sense as to how these numbers are adding up. But before that, let me go across to Mitali. She's here with the fine print.
Right, talking about Axis Bank, so a weak set of numbers for Q1 FY27. If you see the net interest income, it came in at around 14,646 odd crore rupees, which is up 1% on a quarterly basis and 8% yearly, but below the street estimates of 15,146 odd crore rupees. The key drag was the net interest margins, which declined to 3.46% against the 3.62% that we saw in Q4 FY26 and 3.8% a year ago. So a sharp decline seen in their margins, reflecting pressure from the higher share of corporate lending as well as the elevated funding cost for the company. The net profit was up 1% on a quarterly basis, while 23% it has grown on a yearly basis, primarily supported by the lower credit cost. Also, the provisions, they have declined sharply, 37% on a quarterly basis and 44% declining on a yearly basis, although they were marginally below the street estimates. Asset quality, that remained the key positive for Q1 FY27. The gross NPA improved to 1.37%, and also the net NPA stood at 0.4% versus the 0.37% that we saw in the previous quarter and 0.45% a year ago, indicating continued stability in the loan book. On the business front, the provisional updates that had come, the gross advances, they have increased 2.3% quarterly and 18.8% on a yearly basis. So a healthy loan growth seen, while the total deposits are up 18.2% yearly, highlighting a strong liability franchise as well for the company. But overall, while the lower provisions and improving asset quality, they supported earnings, but largely a weaker set of numbers for Q1 FY27, missing all the street estimates by Axis Bank.
Missing street estimates, margin seems to be the key pressure point here. Let me bring on board Aditya Shah, get in his views. There's also Gaurang Shah of Geojit Financial Services joining us. Aditya, first to you, this margin comparison doesn't look pretty at all.
Apart from the margin comparison, I think that the asset quality, if you see sequentially, the asset quality, the slippages and the credit cost has increased, which is really very surprising. If you look at other banks, an RBL or a Federal or any other bank, slippages have continued to abate. But for Axis Bank, slippages have increased. The credit cost has gone up from about 0.75% to about 0.92% this quarter. So from my perspective, we need to see what has happened. Last year in Q1, Axis had a special one-time credit cost. If you remove that, credit costs are higher. That is not something that is really weighed on the results. That needs to be brought out. Apart from this, the loan goes at about 18%. The deposit growth also at about 18%. That looks good, but not too happy with the credit cost numbers first.
Oh, I take your point, and I think what Aditya is alluding to, and Aditya, you can correct me if I'm wrong, there's a 2,000 crore knock on the provisions number, which is a credit cost number in Q4 FY26 as well, which was a one-time knock to strengthen the balance sheet. So technically, credit cost was at 1,500 crore versus the 2,222 crore number, which has come in this particular quarter. So that's one thing that seems to be worrying him. Gaurang, your take with regard to the numbers, 18% growth on the loan growth front, YOY, 2.5% sequential, but that's not reflecting in the net interest income number increase. Would you be worried?
Good morning to you and to all your viewers. All disclosures, SEBI regulation in place. And one more disclosure that we do have a positive coverage on Axis Bank cards from a long-term point of view. So while sequentially, quarter-on-quarter, things may look a little bit below than what the estimates were, But when you look at YOY, I think there could be a little bit better picture to look at. Possibly a little bit of more of a baton from the management in terms of where they could not perform will give us a little bit of more clarity. I would like to say one thing over here, Harsh. Comparing quarter on quarter and deciding on your long-term investment strategy would not be appropriate. There could be misses absolutely possible in any sector and in any company. But taking that quarter on quarter performance and changing your long-term strategy, I think that would be a little bit of a little bit in a hurry to take that kind of a decision. I'll give benefit of doubt, and I would possibly want to look into and hear into the verbatim from the management as to where things have missed a little bit than what the street estimates were. My view, Harsh, overall, as far as the entire banking pack goes, and of course, not to forget, Harsh, today is a result-heavy day. We will have HDFC, ICICI, Kotak, and Yes Bank deliver numbers today itself. So I would possibly give it a little bit of more benefit of doubt and possibly look at a little bit of larger and longer picture. And giving that kind of a view and an approach, my sense is that the banking pack overall should do extremely well as we go into the future. So I would give it a one-off kind of an approach with small misses here and there.
Both are guests, both Gaurang as well as Aditya, saying the NIM miss is not really a concern, at least from the get-go, because you want to look at it medium term. You don't want to look at it from a short-term perspective. Gaurang, thank you so much for coming in. Of course, we'll continue to engage with you as those results unfold.